But we have an energy analyst who says the current price of oil is fair, and there's a strong case to be made that it might even go higher.
We welcome Chris Jarvis. He's president and director of research at Caprock Risk Management, one of the smartest guys in the space that I've known over more than a decade of covering this stuff. What makes you think that what Spencer just said is wrong and there is more upside? And by the way, how much more?
Well, I totally disagree with the previous guest. I think there's three things right now. Fundamentals, I think technically, and I think geopolitical risk are right now on the table, are all lined up right now to support crude oil prices going much higher. I think fundamentally you're seeing U.S. economic data doing much better. I also think the issues out of Greece with the euro, I think that's relieved some of this risk aversion trade, which was dollar positive and euro negative. That reverses. It's bullish for commodities. No surprise to see gold hitting 52-week high there. So I think fundamentally that's supportive. Technically, I think if you take a look at it, most commodities will peak 6 to 9 months after equity. So if equities are making their highs today, chances are commodities are going to make those highs 6 to 9 months later. And the other thing is the technical factor. 102 on crude oil was a big overhead resistance. Once we broke 102, I think it's all clear to go to 115 to test the highs from April of last year. And lastly, the geopolitical risk. Election year, I don't think Obama's going to do anything with Iran. I think the window of opportunity for Iran is closing probably the June timeframe. Israel could hit. I think you need to bake that into
You know, I tend to agree with you on the geopolitical risk. However, let me take issue with one thing you said, the value of the dollar. You think the euro is going to get stronger versus the dollar? Because you look at what happens. They're printing another €1 trillion. That's part of the New Deal. When you print a lot more currency, it means your own currency goes down, is deflated a little bit. I mean, don't you think that will strengthen the dollar and perhaps then bring down the price of oil?
I think it's the yin and the yang when it comes to the U.S. economy with the Europe economy. Yeah. But the big thing with the headlines coming out of Europe day in and day out prior to what they resolved with Greece was how bad is it going to get in Europe?
But you don't think that the euro gets weaker as they print more euros, which is exactly what their central bank is going to do?
Over the near term, I do not. I think actually you've already seen that traded. I think a lot of people anticipated that trade. If anything, I think it's going to reverse out the short, and I think that's going to bolster commodities, and that's why you're seeing gold hit highs today.
Let us push you on fundamentals. You mentioned fundamentals. Well, here's a fundamental. We have inventories at multi-year highs and multi-month highs, depending on which part of the energy complex you're looking at. Plus, usage is going down. Demand has gone down more than 6%, Chris. So what do you mean by fundamentals?
Well, here's the thing with that. Oil has not traded on fundamentals in 10 years. I mean, that's been out the window for quite some time here, some time. Yeah. One outage from Iran or any of these hot spots, a couple of days worth of oil, you're below 5-year averages in a day or two. So it doesn't take much to change that. The other big thing is demand is weak year over year. I'll grant that. But, however, a lot of that is weather related. I think the warm weather we had in North America definitely took a lot of heat off distillates, no pun intended. And so therefore, you're seeing, the demand numbers look pretty weak. But if you look at U.S. economic data, we're heading into peak driving season. I think you have another leg up for demand. It could surprise on the upside.
With a pullback like you have today, I imagine you're buying. What do you buy? How do you buy into oil?
Well, I will agree with one thing on your previous guest. I do like ExxonMobil quite a bit with a dividend. I'm not a big fan of the USO. It has a contango in it, which is a yield curve. So every time it trades into the next month, you're losing 5 or 10%. I would not recommend that.
What about the drillers? What about something we had a guest in the last hour that said Seadrill? They make the offshore rigs.
I think right now with rig counts on all-time high, you could throw a dart. You could hit oil field service stocks. You could do E&Ps. Anything related to crude oil or oil field services, you do well. On the natural gas side, I think you're hurting. If I had to choose a stock there, to be Chesapeake Energy.
Great advice. Chris Jarvis, great to see you, Chris. Thanks for coming. President and Director of Research at Caprock Risk Management.